All right, today we're talking about one of the absolute safest places you can put your money, Treasury bills. You've probably heard them called T-bills, and they are, no joke, the bedrock of the entire financial system. So let's dive in and see what they're all about. Okay, think about this for a second. Where does a massive bank park its money overnight? And I mean thousands of crores. That kind of cash can't just sit in a vault, right? It's got to be somewhere super safe, but also available, like right now. So where on earth does it go? Well, the answer to that huge question, it's Treasury bills. Let's get right into what these things actually are. So, at its heart, a T-bill is really, really simple. Just think of it as a short-term IOU from the government. You know, when the government has a small cash crunch, a little gap in funding, it issues these bills. When you buy one, you're basically giving the government a short-term loan. So, what's the big deal with T-bills? Why are they so special? It all comes down to these key features. First, and this is the big one, zero credit risk. We're talking government-backed. So the chance of you not getting your money back is, well, pretty much zero. Then, they're super short-term, they're issued at a discount, and they're highly liquid, meaning you can sell them easily. But wait, see that part about no interest? Don't worry, we're going to get to how you actually make money in just a second. And when we say short term, we really mean it. Here in India, you're looking at T-bills that mature in 91 days, 182 days, or 364 days. So basically, 3 months, 6 months, or about a year. This makes them absolutely perfect for stashing cash you know you're going to need pretty soon. All right, let's solve that mystery. If T-bills don't pay any interest, how in the world do you profit? Well, this is where things get really clever. The idea is actually super simple. You buy it for cheap, and at the end, you get paid the full price. That's it. It's not about getting interest checks. It's all about that price difference. Okay, let's put some numbers to this. Imagine a T-bill has a face value of 100 rupees. That's the amount the government promises to hand you back when it matures. Simple enough. But here's the key. You don't actually pay 100 rupees for it. You get to buy it at a discount, let's say for 98.50. And boom, there it is. That 1 rupee and 50 paisa difference, that's your profit. It's that simple. And the best part? That return is locked in the second you buy it. No surprises. Now, you might be thinking a rupee and a half doesn't sound like much, but if you take that profit from, say, a 91-day T-bill and stretch it out over a whole year, what we call annualizing it, it comes out to a yield of around 6.1%. And that is a super important number. It's how investors compare different options, and many people consider the T-bill yield to be the risk-free rate. It's like the fundamental baseline for all other investments. Okay, so we've got the what and the how you make money down. But how do these things even get created and sold? And why are banks so obsessed with them? It's all about the T-bill ecosystem. It all kicks off with an auction run by the RBI. So the RBI announces, hey, we're selling T-bills. Then the big players, banks, mutual funds, they all jump in and submit their bids. Based on those bids, a cutoff yield is decided, and then the T-bills are handed out to the winners. It's a really smooth, efficient process. And this brings us right back to where we started. Why do banks love these so much? Because T-bills are literally the perfect tool for them. They can park massive amounts of extra cash with zero risk, handle their day-to-day liquidity, and even use them to check off some regulatory boxes. It's a win-win-win for them. Okay, we get it. Banks are all over T-bills. But what about everyone else? Are they a good fit for you? Let's find out. So yeah, no surprise, the heavy hitters are institutions. We're talking banks, mutual funds that focus on liquid assets, and big companies managing their extra cash. They all use T-bills. But here's the thing, they aren't just for the big guys. If you're a regular investor just looking for one of the safest possible places to put your money for a short while, T-bills are definitely an option. So let's put this into perspective. How do T-bills compare to other stuff you might know? Take a fixed deposit. A T-bill is typically easier to sell if you need the cash, and its risk is basically zero since it's from the government, not a bank. Now compare it to commercial paper, which is debt from a company. Well, the difference in safety is just massive. When your number one goal is not losing money, T-bills are in a league of their own. All right, if you remember nothing else, remember these 3 words: safe, liquid, government-backed. That's the essence of a treasury bill. It's as simple and as powerful as that. Look, at the end of the day, T-bills are the foundation of the short-term money market. They are not going to make you rich quick. That's not what they're for. Their one job is to keep your money safe, and they are absolutely the best in the business at doing that. Hey, if you learned something today, make sure you follow for more real finance knowledge.